Okay, hi guys, I'm Jordan. This is Martin here with San Diego's favorite team. So I was just having a discussion with Martin earlier today, and I thought it would be good to kind of go over it so everyone could get some insight on what's happening today. So Martin, tell us a little bit about what we're seeing in today's market, the shift that's happening, and what's to come forward.
Yeah. So thanks. Hi.
Hi.
You like my club? I'm ready for the Islands attire
Yeah, it's
today.
very Hamptons. It's
Yeah.
giving New York.
Okay, bougie. So a little bit. So we were talking about the market, and the market right now is really interesting. It's seasonal, right? Where it's in June and it is robust, and people are getting out of school and looking for the next home, whether it's rental if they can't find it, purchase, right? And we typically are still busy going into July, August. We've noticed that school systems are really starting in August. Back in the day, because I'm old AF, we would start school in September. But now everybody's in August, so that means nobody wants to look for a property. They don't want to move. Costs go up, utilities, everything goes up in August, and so there's just this whole concept of I don't want to spend, I don't want to move. It's crazy, especially if you have kids. Okay. Yeah. So we know that's coming. So that's kind of where we're seeing the trajectory as far as activity. But then you go into Q3 and Q4, and especially as you go at the end of Q3 and Q4, I think this is going to be your last opportunity as a buyer to really say, hey, you know what? If I'm willing or able to make a move at this point where a lot of buyers still don't come jumping back in, school settled, et cetera, there are some deals, for lack of a better description. There are some opportunities, I would say. If a seller's out there, you know, there's a motivation for that seller to have it during Q3 and Q4 to sell their home, right?
Yeah. Okay, so tell us a little bit about the interest rates and what buyers should be expecting and what's going to kind of happen or pivot if the interest rates do end up going down.
Okay, so great question. So right now it's around 6.75, 6.8 and some change. Probably less if you have some relationship with the big banks. They're always providing some sort of motivation to have people move their money over. When I say the big boys, we're talking about Citibank, Chase, B of A, Wells Fargo, et cetera, the big banks. If interest rates go down, and I don't see it happening before Q4, but you know, again, that's just my gut instinct. If it goes down, then come 2025, especially if we get into the low sixes, even fives, it's going to be nuts. And nuts is, as opposed to seeing 6 offers like we just did on Edmonton, you'll see 20, you'll see 10, 15, 20. And that will inflate pricing. Sellers always have to be conscious about, of course, appraisal, but you're going to see some really robust activity. Now, do I think inventory will increase? I do. Do I think it will become a buyer's market? It's interesting. Robert Redkin is saying that we're in a buyer's market across the country right now. I don't agree with that. Definitely not here in San Diego or in LA. I think that sellers are still dictating, and with interest rates going down, I think they will continue to be in the position of power.
Yeah, and we're still seeing, like you said, Edmonton had 6 offers, and if someone wants a turnkey home that's ready to go, then we're still getting a bunch of offers, even though interest rates are on the higher side. So it's going to be crazy if they go down, when they go down.
Yep.
Well, thanks for coming and talking to everyone and giving some insight on the real estate market today.
Yeah, I appreciate you.
What do you always say?
And make it a great day.